Okay. All right. We'll sort out anything that that is that's technical, and we can do that. That's not a problem. Just chat on the box and let me know. Okay, so a very good evening, and it's nighttime there in Malaysia, I know, and good afternoon to some. And my name is Kenny Simon. Thank you very much for attending my webinar today. Today will be the first one for the group here via FX Geometry and in collaboration with Blackwell Global. So thank you very much for attending today's live webinar on geometric patterns. We are going on to trade ideas. I've analyzed the market. I'll analyze it with you guys, showing you patterns and the trade ideas that I have spotted. And you guys are most welcome to ask me questions along the way. Okay, all right, so let's get going then. Okay, so we are going to be looking at quite a number of pairs, majors, and also gold. There's a lot of interest in gold, so we'll look into gold, silver. For those of you guys who want to request some pairs that I have not covered, feel free, and then we can go and look into that pair. So let's start with a bit of sentiment. Sentiment in the market is really important, okay? Just to know the rough idea of what's going on. Oh, not here, sorry about that. What's going on in the markets today in terms of market sentiments. It's actually the feelings of the market, okay? Feelings meaning emotions by investors, whether there's a lot of greed in the market. When market goes up and up and up, that means there's a lot of greed in the market, a lot of greediness in the market, okay? So a lot of people will be, most investors will be buying or trying to push market prices up and up and up. So that is when you've got lots of greed in the market, so you've got a lot of bullishness, okay? Or whether or not it's bearishness that's driven by fear in the market, or does the market actually go sideways? And all these sideways, upward move, or even downtrend can actually be seen onto the chart through your chart patterns, through your candlesticks and all that. That's why trend is your number one friend that you need to have, okay? So you need to understand the trend, the sentiments of the market, what the investors are doing. So very simply, as you can see on my screen, I usually start off with listening to the news, understanding a little bit about major pairs. Of course, you want to look and understand what's going on in the States, whether or not the economy in the States or the US dollar is driven by positive news, positivity, or negative news or negativity. So at this moment of time, we have got some negativity, but I'll show you on what I mean and why. Okay, so we want to evaluate some websites to tell us the feelings of the market, very important, so that we understand the trend. Only after we understand the trend that we are able to then look for patterns that would coincide or match with the trend. If the trend is bearish, we look for bearish patterns. We trade bears, we trade downtrend, we trade sell. If it is uptrend, bullishness in the market, we look for bullish patterns, and then we click onto the buy. We look for buy type trades. Okay, so this is basically how I trade, how I analyze the market. And we'll start off with this here. We're looking at a website called Action Forex. I have shared with you guys in Malaysia as well, and in majority of my webinar. This is one part I will cover that is a little bit extra. I want to tell you a little bit about the 4-hour here, the 4-hour area here, and the daily area. We forget about the weekly and the monthly for now. Okay. So usually what I look at is I try to look at the top 10 movers of the market. When I say top 10 movers of the market, it means that these pairs or these currency pairs are the one moved by investors, and there has been a lot of participation by investors into these pairs. So for example, if you look into the 4-hour chart, as of this morning as well, it changes from time to time, maybe in a couple of hours, sometime in an hour or so, sometime less, sometime more. These pairs would actually change, but it is a good habit for you to look at this table on actionforex.com. When you go onto actionforex.com, you simply go onto markets here and you click on top movers, okay? And once you click on top movers, you look into the 4-hour under the 4-hour, okay? And you look at the top 10. You look at the top 2 or top 3 as well, it doesn't matter. But then here itself gives you an idea that there has been a lot of movement caused by investors trading the euro. As you can see, it's a lot of euro. The first two, it's euro. Second one is euro versus USD. The first one is euro versus Canadian dollar. So why euro versus Canadian dollar? Why it's not euro versus NZD or AUD or euro versus CHF? So there must be a reason why there's a lot of movement, and the movement for euro is on the positive side. Once you look at the currencies here on the first column, you go to the last column and you look into the numbers, okay, the numbers here, and it's 0.47, it's 0.37 for example, but you want to look at the symbol. Is it positive or negative? If it is positive, it means that majority of people are buying the base currency. The base currency is euro. The base currency is always the first currency on the left, okay. Arif may have covered on this one. A lot of you guys, if you are basics, you need to know, cover the basics, you need to know the first currency on the left is always called the base currency, and the base currency is the one that you pay the most attention to. So when you're looking onto the chart, it's the base currency. So here, a lot of people are buying the euro and they are selling the CAD. Why buying the euro? Because euro is the first currency on the left, the base currency, and there's a positive sign. If it's a positive sign, that means they are buying the euro, okay? If you've got a negative sign like this one here, negative 19, that one is for CAD versus CHF. CAD is your Canadian dollar, CHF is your Swiss franc from Switzerland, okay? So here, because it's negative, that means they are selling the Canadian dollar, which is the base currency. So negative symbol means they are selling the base currency. Positive means they are buying the base currency. So here itself, if you are basic beginners, you just pay attention to the first two currencies. Then you know that a lot of investors are paying attention to the Euro USD, to the Euro Canadian dollar. So there's a lot of movement with the Euro. So why is it a lot of movement with the Euro? We then combine it with a little bit of fundamental. We'll look into the economic calendar for today. Let's say today is Thursday, January 12th. Okay, and you can see that I've filtered all these data, economic data release from medium impact to high impact. The red one means it's very high impact, it's very important. Okay, so here you could see that you've got quite a number of news here. Industrial production news, industrial production again, and then you've got ECB monetary policy meeting. So that has already gone on. So that is labeled or categorized as high impact. So that's why a lot of investors have actually paid a lot of attention to euro. Okay, so that is very important. So once you know which currency they are moving the market by investors, you then look into the direction a little bit. Direction meaning, are they buying the euro more, or they're actually selling? When I say they, I mean investors, the bigger movers. When I say investors, they could actually make up of corporations, companies, but major banks and hedge funds and all these kind of companies. So this is just to give you an idea. It may not be highly accurate for you to actually look into this, but this gives you a good idea. I've been using this for quite a number of years on Action Forex, and I see that it's quite good. Now, this is not to predict the market, to tell you which one to buy, which one to sell straight away. No, it's giving you an idea. You have to start with the first step. The first step of the price trade plan that I will cover with you guys very soon. Once the FX geometry is up and running, you will be given the trade plan price. So price, the first P, tells you about how to look for the right pairs and how to first identify the trend, to know about the outlook of the market. Once you know that, then you can choose the right pairs. So it does not mean that this does not mean that it's best for you to choose one pair and for the entire year, every day of the week, you trade that pair. It may not be the best way to trade. Okay, even though you are trading Euro USD or one pair, choosing one pair is very good. But having that one pair to be traded every single day may not be the best plan that you may have to trade the market. So because every day is driven by different factors, different countries, different politicians, different geopolitical factor by different countries, so these would then help you choose the best pairs for the day. So each day has got different pairs. So this is how we look into it. So here I would like to look at patterns for Euro CAD and Euro USD, GBP CAD. Maybe I'll choose top 5 or top 3 or something like that. You can choose top 10 if you want, but just the first few of this list give you an idea that people are buying the euro, they are selling the USD. Now look at GBP CAD. GBP CAD, they are buying the pound. Okay, GBP is a Great Britain pound. And they are buying the pound, they're selling the CAD. CAD is a Canadian dollar. So you've got number 3 tells you they are buying the pound, selling the Canadian dollar. Number 1 tells you they are buying the euro, selling the CAD. So here you've got one commonality. They are selling the Canadian dollar. So why they are selling the Canadian dollar? There may be a lot of reasons for it. Maybe it's economical, maybe it is political. Okay, so now you know that they are selling the Canadian dollar. There's no choice but to sell the Canadian dollar if you were to be a trader, if the trend is for selling. So imagine if you're not looked at this and then you go and buy the Canadian dollar, because Canadian dollar is falling, let's say, and you are buying, you will be at loss. Okay, so that is why we want to look at the pairs, and here it says that it's most of the investors look at number 1, number 2. Number 1 is Euro CAD, number 2 Euro USD, correct? Number 3 and number 4 Euro New Zealand and Euro JPY. But all the Euro ones, if you can if you can see, they are all buying the euro. Okay, they are not selling the euro. So this is giving us a bit of an idea that the trend for the euro is on the upside. It's bullish. So when it's bullish for euro, it is not a good idea to sell the euro. When anything is going up, you want to buy. Anything going down, you want to sell. So for euro at this stage, it's a good pair. It's a good currency to look at and pay attention to for the euro, but you want to then look at the trend and choose the right pair concerning the euro, and then you look for patterns and then we trade them. Okay, I think I've got some questions coming up. Let's see. Okay, Kaliswari, you are still having a little bit of problem with the okay, let me just check. Okay, with the sound system here for Kaliswari. Kaliswari, give me a second. You can hear me or not? You cannot hear me, you mean, Kaleswari? Can you hear me and you can see my screen? Or let me just type. Let me just type. Yeah, give me a second, guys. All right. Here we go. Kaliswari, I've typed it to you. If you can hear me, it will be great. But I think let me just check again. I don't see. You are muted, definitely, because all the attendees are muted anyway. But you should be able to hear me though. Okay, let me just check that again. Because I've muted all. All right, let's just carry on with that. I've checked. I've checked. I don't think there's anything on this end, but everybody is muted. Okay, you're unable to hear. Okay. I think it's more on your end. Let me just check. Okay. I'm just going to type one more time, guys. Yeah, let me just check here. Can you guys confirm? Most of you guys here can hear me loud and clear, can see my screen as well, right? Just to confirm that it may be on Kaleswari's end, at her end about the sound. You guys are okay, I guess, yeah? It's only Miss Kaleswari at the moment that could not hear me. All right, let me just check. Okay, so meantime, let's just waiting for Kaliswari to feedback me on the sound. Let's go back to that. So now we know that you know, for now at least, or for now, for the near future, for the shorter term, euro is well concentrated. When we check onto the economic calendar, that is telling us again that we have got some economic calendar concerning the euro. So hence the reason we've got lots of attention by investors looking into moving the euro. So if the big boys, are moving the euro, and there's a lot of movement with, let's say, Euro CAD, Euro USD, Euro NZD, Euro JPY, these are potentially the pairs that you could then go onto your chart and look for patterns, okay? Because it's probably best for us to look into the pairs that are moved quite a lot. Now, once you get the first pair, let's say you get the first pair Euro Canadian dollar or Euro USD, you can then go onto the volatility chart to show you how volatile that pair is with the other currencies, one currency in comparison to the other currency. So let's say euro and Canadian dollar, okay? You can go into markets again, you can click on the volatility chart, okay? Once you click on the volatility chart, you can always combine the 4-hour and the daily. Let's say you today's concentration is on euro because there's a lot of news on euro, and then on the top movers as well, they're talking about the euro. They're showing you that euro has got a lot of movement. So then you go onto the euro, you see on the left it says euro, then you go onto the 4-hour plus the daily chart, then you look at this funny diagram here. This image or diagram here shows you the euro volatility chart against which currency is most volatile. That means a lot of movements. Okay, whether there are a lot of liquidity or not, or volume, is another story, but there's a lot of movements. Okay, and movements can be on the upside and the downside. It all depends on the trend. So here it's telling you that euro versus the GBP has got very big movement, because you see it's very sharp, it's pointing very sharp, very close to the GBP. Okay, that blue color shaded area. So that shaded area on GBP is telling you that if you combine euro and the GBP, that will give you the pair that offers you very high volatility. Very high volatility means very high movement, but it also means very high risk. So you've got to be careful. Okay, so hence the reason at least we know if you are going to combine euro and GBP, do you actually buy the euro more or sell the GBP? In this case, when you're looking at what the big boys are doing, the investors are doing, they are buying the euro, okay? Because as we go on, as we went earlier on, we went here, okay, and we went to top movers, and on the 4-hour chart is showing us that euro is on the upside. There's a positive symbol, okay? So that's why if you are paying attention to the euro versus the GBP, you would be most likely looking at an uptrend for the euro and a downtrend for the GBP, because here it's showing you most of the investors are buying positive, 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 more on the euro down there, more positive. Okay, let me just check the chat again. Okay, Khaleswari, I'm very, very sorry. I'm not sure what is happening. Most of the people can actually hear me quite well. So yes, this session will be recorded anyway. So I will pass the recordings link to Mr. Kunan and have that passed to you then. Okay. Sorry about that. Okay, let me just type that. Let me just type that very quickly. All right. Okay, so let's get on with that. So now you've got an idea of looking at the top movers, looking at a bit of the volatility. Okay, this is all from Action Forex itself, give you an idea of what's going on. Of course, you've got the fundamental side of it. You've got the economic calendar. You've also got the 0H talkingforex.com. You just type 0H and then you type Talking Forex, as you can see in this URL here on your Google, and then you've got a site will come up, and this is the site that gives you all the news. Okay, so I'm combining a bit of news, a bit of economic data to make my fundamental analysis. Okay, to find out which pairs will be moved a lot on the fundamental news side of things as well. Okay, so here itself, you see every few minutes or so you get all this news coming up. So here itself, look at the heading. It's saying USD grinding lower. So this is even without reading all that, you get an idea already that the USD is on the falling side, okay, is grinding lower as yield differentials draw in dip buyers. Okay, so the USD is grinding lower, pushing levels below 114.00 against the JPY. So USD JPY basically is aiming at the 114 area, going lower. This is telling you straight away that there's a downtrend. Best to sell USD JPY, not to buy USD JPY, but the confirmation should only come later. So I'm not here to tell you directly buy, sell. I'm telling you the overall market outlook, the trend, and then we go step by step in evaluating the risk and then looking at the level of probability as well before we finally decide, or you as a trader decide which pair, which direction, and then we look into the patterns as well. Okay, so this is basically it. So we've got a bit of an idea there now. ECB minute states that the central bank saw headline inflation. So they are looking at inflation. Now inflation meaning things are inflated like a balloon. You put air in it, it inflates, it goes up, 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 right? So anything that inflates goes up, so does the euro. The euro is talked about having inflation, so that is looking into the euro's sentiments or trend going to the upside as opposed to the downside. Okay, so here is confirming what we are looking at in the table in Action Forex top movers already. So that gives you an idea already. Okay, so that is your analysis on the overall market trend outlook. Okay, now we go on to the chart. So before that, I want to share with you as well another site called barchart.com. When you go to barchart.com, you click onto the word Forex, and then on the left, you could find Forex market map. Now, this market map here is introduced by a colleague of mine, a friend of mine as well, and he's been using this, and I find it to be quite interesting. After evaluating this this one here, I don't really use it as a market map. I use it as a volume map, meaning how much volume circulation of money for that particular pair is. Which one has the highest? Like for example, the one that you see on the green here is for the buy side. That means this movement is for the buy side. Okay, now anything on the red is on the sell side. So how I use it is that I look at the highest building, like it looks like all these are looks like buildings, right? So the highest step is JPY USD, correct? But it's under the JPY. So this gives me an idea that there's a lot of circulation, volume of money, opportunities as well concerning the JPY. Second, concerning the AUD. Third, concerning the euro, so on and so forth. So I know that there's a lot of volume and opportunity on the JPY. There's a lot of movement on the euro, correct? And there's a lot of opportunity on the JPY. So if you combine the two, euro with JPY, then you would get a lot of movement, a lot of good movement of pips, you see. So volatility tells you the big movement of it in terms of how do you call that, ups and downs, and whether to the downside, to the upside, and all that in general. Okay, volume is the circulation of the money itself in terms of liquidity. So if you combine the two, volatility could be risks, could be telling you how much movement, how much pips you could potentially make. Volume tells you the opportunity, how long that trend can go on in terms of, because there's a lot of liquidity, it will then encourage more activities buying and selling for that currency, so you can stay longer in the market. So that is where you combine volatility and volume differently. Okay, so that is how we do it. So here you've got on the sell side, you have got on the sell side, it's the dollar. Okay, so you've got USD being the one that has got highest sell side order. Oops, sorry about that. Let me just adjust the size a little bit here. Okay, so this tells us that opportunities could come from both the JPY and the USD, but USD more on the selling side, JPY is more on the buy side. So this is basically one way to actually use this site. Okay, let me adjust the size again. Okay, so let's get into the trend, the geometric patterns at this moment of time. Okay, so let's just go into that. Let me just minimize this. Not sure where that is now. Give me a second, guys. I was just about, there we go. All right, so Let's look into the USD/JPY. Okay, so we've got the USD/JPY. I'm looking into the USD/JPY on the 1 hour chart first. This is 15 minutes. And we could see just on the 1 hour chart itself, you can see just to confirm what we have just talked about earlier on. It's more on the upside for the euro, more downside for the dollar, okay, more upside for the yen. So now here for downside of the dollar, it is shown here. Okay, so I usually I always start with the 1 hour chart and then I go to the 4 hour chart and the daily. But I do this not to look for, you need to understand that I don't do that to look for which one to trade and quickly click on the buy and sell. We don't do that. We need to always confirm, take at least 5, 10, 15 minutes, whatever, to confirm the trend and to understand which pair to choose. These are the number one rule so that you can cut your risk and increase your probability. So here, I will compare 1 hour with 4 hour, 4 hour with daily chart. Now, I will then apply as well the moving averages, the exponential moving averages. Okay, you can apply 3 moving averages like here. You can apply the 200, the 100, and the 50. Now, you need to just look into the 1 hour chart first. Okay, start with the 1 hour chart, then go to the 4 hour and daily just to look at the match between the trends between these 3 time frames. Okay, so then if you've got majority of candles like you see here, they're under all 3 lines, this gives you a good idea that it's on the downtrend. Okay, the USD is on the downtrend versus the yen. The yen is on the upside, the dollar is on the downside. Okay, so here itself we have got a downtrend bias for the USD versus the JPY. So if it is on the downtrend, you need to decide whether you are supposed to or better off buying or selling the USD. Okay, so here usually traders, what they do on the downside, best for them, they have always done it to sell the currencies. On the buy side, it's usually when it goes up. Okay, so here it's on the downside for the dollar, so dollar is best for the sell type order. All right, so because it's under all these 3 lines as well. Now I think I've got some question coming up. Elias, Yahya, I think you've got a question or something like that. You can always type it onto the box, okay? Or can you hear me okay? I'm not sure whether you can hear me or not. You can type. Okay, so on the 1 hour chart, it's on the downside. Now, on the 4 hour chart, for example, whether or not the candles are under all 3 lines. In this case, yes, they are under. They're giving you, again, on the 4 hour chart, an idea to the downside. On the daily chart, it is just beginning. It is going downwards, for example, but it's not under all 3 lines as yet. So that means on the 1 hour and 4 hour chart, it's best for you to pay attention on the 1 hour and 4 hour and not the daily chart, because the candles are not under all 3 lines or above all. It is above all 3 lines, but it's touching that line there. So we always want the candles to behave properly, meaning they should be well away the 3 lines and not touching it, above or well under all 3 lines and not touching them. So that would be a better type analysis for that pair, and we'll pay attention to that analysis. Okay, to that pair, sorry. So here on the USD JPY on the long term, now you can do this. When you look into the 1 hour, 4 hour and daily, okay, what you can then do is treat your 1 hour as your short term, your 4 hour as your medium, and your daily as your longer term. Okay, so here in the longer term on the daily chart, usually it happens in within a month or so. Okay, that means it can last from anywhere one month view to about a month view, even longer, even shorter sometimes, depending on how much the market moves. Okay, and how much the trend is strong, you know, how strong the trend is. So here on the longer perspective, on the daily chart, long term, we are looking at more room to the downside, bearishness for the USD versus the yen. Now, if you look into this, we've got an A, B, C, D type pattern. It is actually not an A, B, C, D pattern. It's a Z pattern, but you can label it as A, B, C, D. Now we are looking at a downward move from this area here okay, right down to this area here. That means there are still some gaps, some movement for prices to fall and reach this reversal area. Reversal zone means that the area where the price could fall and start to reverse. In this case, it'll start to reverse upwards. Okay, so you still have got some more room to actually look into selling, but the thing is that if you are looking into room to sell and you have $500 or $1,000 as your equity, it's best for you to quickly go onto shorter term and look for shorter time frame and shorter opportunities to sell. Why sell? Because the overall downtrend for the USD JPY. Okay, so you want to look into downtrend. If you've got higher equity, bigger margin, more free margin, then it's better for you to look into 1 hour and up. If you've got 10K and above, 20K and above as your equity, then it would probably be best to look into 4 hour and daily. So anything below 5K or so, it's best for you to limit your time frame to up to an hour. It is actually good for you so that you can trade intraday, you can build up your equity, build up your balance before you actually trade bigger time frame. Bigger time frame means you need the extra cushion or margin to protect you from bigger corrections. Bigger time frame, bigger corrections. Bigger corrections means needing your bigger equity. Okay, so this is what it means. So if you got 500, 100, $200, best for you to start. If you're starting small, start with smaller time frame, like 15 minutes, 5, 15, 30 minutes, this kind of time frame. Okay, and you compare 5 minutes, 15 minutes, and 30 minutes, let's say, for example. You can combine 30 minutes, 1 hour, and 4 hour, for example, depending on your equity level. Okay, so that is why it's always good for you to realize that you picking the time frame does not depend on just you liking it or not. It has to go back to your risk level, and your risk level is your margin, and your margin is protected by your what do you call that, your capitalization, your equity, your starting capital. Okay, your money in your account. This is very important. So that should be the one deciding which time frame you should choose. Shorter time frame, smaller deposits, smaller equity. Bigger, medium, then medium time frame. Bigger time frame, then it would fit bigger deposit level, 10K and above, and so on. Okay, so this is an important tip for you guys to always remember. Now here we have got room USD JPY daily to the downside. It is looking like it may aim at the 11060 level. That would be your ideal or potential take profit area. But we need to now look at the price for the USD JPY. For example, you're looking at selling, you need to follow the principles of the psychological numbers. Now 114.46 is too close to the 114.50 psych number. Okay, so if you are selling, you need to sell under the psychological number, under the 50, at least by 10 pips. So 114.40, because 50 minus 10 would be 40, so 114.40 would be an ideal, potentially an ideal selling area or zone. But this is based on the principles of psychological numbers. You need to decide whether you want it to be lower by 5 pips under the psychological numbers, or lower by 10 pips. Usually it's between 5 to 10 pips, but you make that decisions whether you whether you want it lower by 5 pips or 10 pips. Okay, so if I were to be looking at selling this and looking at the daily chart here, the potential sell area would be 114.40. Let's say that is an example that I have taken. An example that I've taken from an ideal entry perspective to be 114 based on the principles of psychological numbers. So 114.40, let's say. Okay, so I leave this one here. This would be an area. Now this again depends. You are looking at this daily chart only if your equity fits it. Okay, if it doesn't fit it, you can still go on to the selling it, but you look for selling type ABCD pattern or selling type patterns on a lower time frame. Whether it is a 5 minutes, 15 minutes, 30 minutes, or 1 hour, you can go lower depending on your equity level. Okay, so you can still look at this as an idea to tell you that for the longer term, the direction for the dollar versus the yen is to the downside. You can sell, but you need to sell following which time frame? Okay, so following the time frame, you will have that type patterns. You follow that type patterns and take small profit as well. Now, if you are trading smaller patterns, you aim for smaller pips. Don't go to the smaller time frame like 5 minutes or 15 minutes and aim 100 pips, 100 or 150 pips like what you would aim on the daily chart. No, you cannot. You have to break that down in pieces. Okay, you have to break that down into smaller chunks. Okay, maybe it's 150 here potential pip or 300 potential pip in the daily chart. It will still be the same in the slower time frame, but the lower time frame gives you maybe smaller because you are trading in stages. You have to look for that pattern that you have in the lower time frame. So the lower time frame might have only 20 pips. The pattern that gives you 20 pips or 15 pips, take it. Okay, and then you re-enter again, and then you take it again, and that is how you trade in stages because you are building up your capital if you are starting small. Okay, hope that is clear for you guys. Now, so 11440. Now, if the direction is to the downside, let's say, okay, the reason why I have chosen 11060 is because there is a lower line in blue. I didn't take that as my TP because I need it to be above the site number 50. So my ideal take profit would be 110.60. My ideal, what do you call that? My ideal entry would be 11440. So if I draw that line, I'll come back to your questions. Give me a second, guys. Yeah, 114. That's 11440. I've said. So let's adjust that. Give me a second. Let me just give you the potential pip movement there. Okay, number of pips. Okay, so done it wrongly there. Give me a second. 40. All right. So we've got 11440. So that yellow line is your entry area. That next yellow line below is your potential take profit area. So then you grab this icon here, and that's your crosshair. You can always click onto that line there. Okay, roughly there. Drag and pull it downwards. Okay, so that if at all this goes down to that area, that gives you 370 pips or so potential profit. Okay, but again, it won't come down in a straight line. You see, that is just your potential number of pips if at all it drops to this level here. Okay, now this pattern tells me that there are potential for it to drop to that area. We need the fundamental aspect and every other factors to drive the price of dollar to go down. So if you've got more negativity, let's say Trump is causing lots more problem, a lot more fear, a lot more uncertainty, then the economy will also tumble towards the downside. Then you've got more movement to the downside. Then you've got more possibility of that reaching the reversal zone. Okay, so let's go to the question. Yes, sure, Elias. The moving average is exponential moving average. There are three of them. The first one is 50. The second one is 100. The third one is 200. So 50, 100, and 200 EMA. Okay, exponential moving average. All right. So these are the ones I use. Now I only use it not to cross. There's no crossing whatever. I don't use it for entry. I don't use any indicators for entry. I just draw the patterns. Okay. So the moving averages are only as an indicator for trend. Okay, so I compare usually three time frames to understand the trend and then to understand the sentiments of the market. You need to combine that with what you see on the fundamental side of it, certain things about news. When you guys join me in FX Geometry and other FX Geometric type what do you call that, webinars and all that, I'll share with you on all the steps. So you will get videos as well guiding you through on how to use the whole strategy, okay, the whole strategy and the steps behind the trade plan, the plan and what you do first, what you do next, and all this step by step before you really click onto the buy or the sell button. Okay, all right, so that's basically it. So here you could see that the prices are resting a little bit here, okay, on the daily chart, right? For those who have lower equity, lower balance for your trade in your live account, you can always go into lower time frame. When you go into lower time frame, you want to look into sell type pattern, meaning bearish type ABCD, bearish type patterns, okay? So here itself, we've got, let's say, on the 5 minutes chart, we have got prices went up here, for example, okay, and started to correct and come down. It's a good rejection type candle, maybe, okay, not a strong one, but a good, not too bad one. So there may be an A somewhere here, an A somewhere here, and then B, and then C here, okay. So if I take a higher point than that point here, maybe that one here, and I drag that down all the way down here, okay, I see that that's a minimum of 38.2, which is good. So that can be my A up here, that could be my B, and then my C. You put AB equals CD, then you find your lower point. So that is how you trade your shorter time frame. Okay, let's see questions. Okay, hi there, Niti. Sure. Niti's question is this: could you also advise on the lot size that, sorry, lot size we could enter based on the equity? Yes, of course. Now, when it comes to lot size, what you can then do is to ask yourself two questions. Okay, one is both questions are from a risk perspective. What that means is that you ask these two questions. Number one question is, what are you personally willing to lose or risk in terms of cash? Okay, so in terms of cash, in terms of money, $100 for that trade, $200, $300. So you write it down. So if I say yes, I'm willing to lose in terms of money, in terms of dollar, $100 only. Okay, so that's my first question answered. Now, for the same trade, I'm willing to risk in terms of pips, let's say not more than 100 pips. So I write that down 100. So I have my two answers. One is $100 that I'm willing to risk. The other one is 100 pips I'm willing to risk. Now I divide the two. $100 divided by 100 pips, 100 divided by 100 gives me the value of 1. Okay, the value of 1 means that I'm supposed to only risk $1 per pip. That means your lot size that you open should be only $1 per pip movement. Okay, you can open one trade that gives you $1 per pip, or you can open two trades, 50 cents per pip and 50 cents per pip, two trades. Okay, but the total amount maximum is you are only risking $1 per pip, because this is based on lot sizing on your risk that you personally need to make that decision. Okay, that decision needs to be made in accordance to the two questions that you need to ask yourself and answer yourself and decide for yourself. Okay, then you decide the lot size. Okay, because the reason is each one of us may have a different level of equity we would start off with, but not only that, we may be having a lot of money that we have started off with, but we may not see that money anymore because we may have gone into a loss. So then we may open some trades, maybe we revenge trade a little bit and things like that, and what happened is that we've got some floating. So maybe you are listening to this today and you've got some floating. You've got some trades that you need to repair. Okay, so that is why it needs to come into a personal two questions. These are the questions that you need to ask yourself and open your trade accordingly to that first. Okay, it is a little bit an emotional related question, but a personally emotional related question that you need to do it that way. So 100 divided by 100. How much in dollars you're willing to risk divided by how many pips you are willing to risk for that trade. Because you might want to just start for that trade, for example, you just want to try out what Kenny is saying a little bit on the FX geometry. I want to try this out. I want to test that out. So I want to only, let's say, willing to risk only about $50 or $100. But in terms of pips, okay, I'll just give it that 80 or 70 or 60, whatever that is your personal choice. And then you divide the two, then you know that is the maximum of pip per value. Dollar, value per pip maximum that you can actually take. Okay, I hope that is clear. Now, it will be very clear with the video tutorials that I will have in my website, fxgeometry.com, meaning I will have recordings. You can watch it over and over again. I will have recordings where I will tell you by subject. So there will be topics like lot sizing, like what Niti have just asked me, and then I'll have a recording specifically for that question, and you can watch by example. You can see the screen, you can see how I calculate, you can see me giving you examples and stuff like that. So this will be a good way for you to learn throughout my recordings, and I'll be updating my recording based on all the questions that you guys will help me do, and then I will categorize them and have all these videos for you to watch, and then you join me on the live. We practice practically on your live trades. Okay. All right, Niti. Hope that is clear for you. Hope that answered your question. Brilliant. Okay. So, but if you guys are still not clear, send me an email. Okay. It is kenny@fxgeometry.com. You can email me there, and I'll be very happy to answer your questions. Okay. Still anything blur, whatever. There is no such thing as dumb questions. There's no such thing as being embarrassed because you have asked 1,000 times. The most important thing is to understand that one time and then practically apply it, and that matters much more than anything else. Okay. All right. So that is for USD JPY. So hope you guys have got some pips in store for that one and follow that trend. For the AUD JPY, for those who have actually followed me and my signals as well on the AUD JPY through Mr. Kunan, you can always contact Mr. Kunan to find out more about trade signals and things that I provide myself with my team, Mr. Kunan and Mr. Arif in Malaysia. So we work in a team to produce you guys some signals for the day to grab some pips. Okay, so here itself, because I've used these signals have been it's for AUD JPY on the 4-hour chart. It's a little bit of a delay, but so far it's been positive because we started with the first ABCD in yellow, then it turned into a second round of trade that is possible with the red ABCD, and then now with the green ABCD. So that means 3 patterns, one after another, came up, pointing to the right direction. Pointing to the same direction, which is to the upside for the AUD. So AUD JPY, I'm looking at the upside bullish movement here, confirmed technically or from the charting perspective with 3 ABCD patterns or bullish time frames. So we are aiming at this zone here, which is a reversal zone between 86.36 right up to 86.68. So this is the area of reversal, also your take profit area, either one of these lines you choose, and these 3 lines create the zone for your take profit, also the zone for a reversal, meaning once it goes up, play around that area, come back down again. Okay, so at this moment of time, AUD JPY is showing us some sort of bullish type movement. Okay, we can always go back and check onto your this area here and go on to the top movers and look into AUD. Let's say what's going on. AUD here, you see, is showing the upside. So investors are still on the buy side for the AUD versus the yen. Okay, so there we go. Let's go back to the chart. Okay, so this is basically it. So we are aiming that yellow line here, 85.60, is ideally the entry area, okay, based on principles of psychological numbers. So we are looking into buying in that area. And again, it does depend on your equity. If your equity does not actually fit 4-hour chart, but the trend is on the upside for the AUD JPY, you can still participate into the buying opportunity, but just go lower, go to the lower time frames. Go to the lower time frames and look for mini or small ABCD pattern pointing upwards, and then you draw out that pattern and you trade that pattern on lower time frames, and then you grab that small pips and then you re-enter again. You adjust your entry based on the principles of psychological numbers, and then you enter again and you take and you gather up your pips in the small time frames, little, like in Malay they say sikit-sikit lama-lama jadi bukit, so this is what you want to practice on if you are on a low time frame. So each one time frame does actually make you the type of investors, the type of investor trader that you are, meaning are you a short-term type, are you a medium-term type, are you a long-term type? You see, that is all, these are all type of traders. So the type of traders is decided by how you are trading it based on time frame, but how you are trading it based on time frames does depend on your equity level, okay, your margin level. All right, so that is a very, very valuable tip I can give you, because this is one of the burning questions by most of the traders is which time frame, or you are already looking into daily chart, but you've got $50 to $100 you want to start off with. It doesn't really match. Smaller time frames fit smaller equity, bigger time frame likewise, on the contrary, fits bigger bigger equity. Okay, so that is a very, very important thing that you need to understand, to apply it. Okay, Mr. Kunan, you've got a question here on behalf of participants. They want to see live trend for 1 hour now, which might happen in 1 hour time from now. Yes, that's a good question. You can always do that. I'm giving you, okay, this is something very important for you guys, okay? When I give you a 4-hour signal, a signal based on 4 hour or a signal based on a daily, what I mean by that is that you can go into lower time frame, whether it's a 1 hour or 30 minutes, because the trend lasts longer. Okay, if I look at the long-term trend or medium-term trend, let's say AUD/JPY, I found that AUD/JPY will give you uptrend opportunities, but I found these uptrend opportunities on the 4-hour and daily, but I need to go onto the daily and 4-hour to tell you that you can start buying from a lower time frame, because I cannot look for long-term time, I cannot look for a trend based on a short term like 1 hour. If I look at a trend for AUD/JPY in a 1 hour time frame, that trend can finish by the time you go on and click on the buy button. It will become a sell. You understand what I mean? So this is very, very important for you to understand. So same thing you can do is that AUD/JPY, you can go now to the 1 hour chart. Very simple, okay? And you can look for buy, okay? If for example, there you go. So if for example, in the AUD/JPY, you want to trade 1 hour because your equity fits your 1 hour time frame, no problem. But you need to first know whether or not it is a buy, it is an uptrend on the 4 hour and uptrend on the daily chart. If there is downtrend on the 4 hour chart and downtrend on the daily chart, you cannot buy on the 1 hour chart. Your 1 hour chart must match your daily chart and your 4 hour chart. Then you can go to your lower time frame. The direction that you trade, this is very important, the direction that you trade or the trend depends on the 4 hour, the daily, the weekly, and the monthly. If on the weekly, monthly, daily, and all that, they all show you a very strong uptrend, then you can go down to your lower time frames and you can feel free to trade that direction that the long-term trend has shown you. Okay, because the long-term trend is the one that shows you the direction actually, because then you know how long that trend can last. Okay, so here, very simple. Let's see, okay, let me open another AUD/JPY. Okay, let's go on to, because for you guys who are still on the AUD/JPY trade, let's say I go on to new chart right there, and AUD/JPY right there. Okay, so let's say you said 1 hour, let's say. Okay, if it is not 1 hour, no problem, you go on to the 15 minutes, let's say. But in general, based on medium and long-term chart, AUD is on the upside versus the yen. So you want to look only for uptrend type, okay, pattern. So here, for example, very quickly, let's say I can spot something quite simple here, let's say to the upside, okay? So I go like this, okay? And then that is my A to B, and then I quickly draw one like this, B to C, okay? Then I lower this a little bit, Okay, I double click my A to B so that my B to C becomes similar in length. Okay, like that, right? So now I have A to B from here to from here, like that. Okay, then this is what you can trade on the 15 minutes, let's say for now kind of thing. But now the price may not be right for you to trade this, okay, because it's 85.68, okay, and the candle is moving down. It's not the right time as yet, okay. So it is at 67 at the moment. Okay, it is at 68, for example. So if I want to find out that whether it's a better price, is there a better price for me to buy? Yes, there is. I look for, I want to go up, right? And I look at the price. If the price is going up and up, which is my psychological number? It's the 80 psych number. Okay, it's the 80 psych number. So if it is the 80 psych number, 86.80, then I need to plus 10 pips above, so it's 86.90 is my buy price. I don't buy right now. So for example, this is my possible take profit area, probable, okay, based on AB equals CD area, okay. Oh, sorry, there. Okay, this is where I could put my TP, okay. But do you enter now? The answer is no. Okay, there is an opportunity, but it is not the timing for you to enter now. If you want to lose, yes, by all means you want to lose, you want to see negative, you go and press your sell buy button now, no problem. For those of you who say, okay, I don't want to buy now because I can see the price is coming downwards, I will click a sell. Of course, you can click the sell as well if you want to lose further for later on. Why? Because the trend is on the upside. Why would you want to go anti the trend? You want to beat, you want to challenge the trend. If you want to challenge the trend, it's not wrong for you to trade anti-trend. But the problem is it'll come back and bite you later on because you don't know until when it might reverse back to its original trend. Okay, so how do you know where do you enter? You click on here, A, you attach to B. This is converting the ABCD into a geometric pattern. Then you've got that there, okay, at the center point. The center point gives you an indication of a probable good area to buy. Good area to buy. Okay, so you see price is coming back now to this area. So it's probably better for you to wait until price or the candle start to go up a little bit more, okay, and go above this yellow line. That means above 85, 66, and above and above. But you need to look for a bullish candle to show you the bullishness first, and then you can take profit and aim at the 86.31 lower. You buy above this yellow line, and then you wait for the bullish candle first. Now it's all bearish candle here. Wait for a bullish candle to go above this one, only then you buy. You can put a pending order if you want. If you are planning for later on, it's better for you to buy later on, and look at how the candles here are respecting that line. That line is based on the center point here. I call the centroid area. Okay, so you don't buy, you don't sell at this moment. You wait for a bullish candle, and then you wait for prices to go above 85.66 and above. Now it is above the yellow line, but the problem is it's not a bullish candle. It's just a bearish candle. See, bearish. Wait for it to be bullish, then bullish candle will take you to that area there, hopefully. Okay, so that's basically for the AUD JPY on the very short term. Now GBP USD is showing some. Let me see. On the 4-hour chart for GBP USD, we are aiming at GBP to have a downtrend. So we're looking at only downwards trend. Now, this is the same thing. For you guys who are asking me whether or not I can look into 1-hour chart or 15 minutes, first look at the trend on the higher time frame, 4-hour, daily, and all that first. It is downtrend in majority of the time frame for the pound. The pound is suffering quite badly, having a lot of bearishness. Okay, even though it's got bearishness at the moment, okay, it is you need to be very careful here. It is bearishness on the long term, but it's bullishness for now. Okay, but here it's showing me, I'm going on the 4-hour, but let's go on to the 15 minutes. Okay, before that, let's start with the 1 hour first to look into the trend. Okay, let's look into what's going on. On the 1 hour chart, we got majority of candles above all three lines, meaning there is some bullishness for the GBP on the 1 hour chart. That means your short time frame kind of thing, it's got a lot of bullishness for the pound. Now, what about the 4 hour chart? 4 hour chart, it's risky, it's dangerous. It is dangerous and risky when you see the candles not above all the three moving averages, not under all three moving averages, but they are playing in the middle, in between all the lines, like this one. In between is not a good thing. That means it's not giving you a clear picture of the trend. So 4 hour chart, wishy-washy, not clear, a little bit kabur, okay, a little bit blur, like foggy, like haze, a bit hazy for the medium term to know exactly what the trend, because it's playing around here. So no, let's look into the daily chart. Daily chart, it's under all the lines, under the three lines. So in other words, GBP on the longer term and based on the daily chart is on the downside. Okay, on the weekly chart, let's see, downside again, very far away from all three lines here, you can see. Okay, and then on the monthly chart again. So on the longer term, there's a lot of strength to the downside. So what does this mean? This means because the daily, the weekly, the monthly is very strong to the downside, it tells you that you can start selling from now until very long for the downtrend. But I'm not telling you go and sell now. Okay, you can sell doesn't mean that sell now is the same thing. No, if I say you can sell or there is a trend to the downside, you need to first find out the timing. The timing needs to be adjusted from the price, from whether or not it's under all the three lines, or you have to go on to the shorter time frame. You have to do a few things at a step, then you click the buy or the sell button. Okay, so for GBP USD, if I go on to the, now I know it's all on the downside. Okay, I go back to my 1 hour chart and then I look at the price for now, what's going on. Okay, I want to sell. I want, let's say, for example, I'm looking at the opportunity to sell the pound because longer term is giving me downtrend. But here, price is going up. And then this is on the way down here. So now I look for patterns. Are they ABCD bearish pattern? The answer is yes. Here I can start with A, I can go down here B, I can go up there C, and then I aim downwards. So this is what you can sell based on this ABCD pattern. So let us just draw one very quickly. But before that, let me use a brand new chart. Okay, let me use a brand new chart on the GBP USD. Let's see. Give me a second, guys. Yeah, it's a little bit slow on my end here, mainly because I'm using TeamViewer from my other screen on this conference room. So that's why it's picking up a little bit slow. Okay, so we go back to, let's say, the 15 minutes chart, or you want, sorry, the 1 hour chart. Always zoom out a little bit so you can get a better idea. Okay, here you have got A went down here and then it started to go up and it's starting to correct itself downwards now. So because it starts to correct itself downwards there, you can make that as your C point here. But your A started here, your B started there. Okay, so I will just reduce the size a little bit. Okay, I'll take that and draw my first line. Okay, A to B. Right, I'm just curious to know where did my C actually landed based on my Fibonacci. Okay, so just to see how high a probability, which Fibonacci ratio is it. So I pull my A right down to B. Now all this step by step that I'm doing on how you pull your Fibonacci, how you draw your line, spot a pattern, draw the AB line, the BC line, the CD line, will all be broken up into very short videos, okay, in the FX Geometry members area. Only members will have access to all my videos. They can watch over and over again the moment they actually log in. Okay, so you will get all these videos, less than 5 minutes or so, to show you every section step by step on how I do things, how I apply Fibonacci ratio, what are the Fibonacci ratio, so you are able to follow it and rewind and watch and re-watch as many times as you want. Okay, so when I pull my A to B, I find that my 70.7 Fibonacci ratio has been touched there. So that means my C retraced at the 70.7 area. The 70.7 usually give me the target of 1.41, right? So I pull my B to C and I look for my 1.41, and I just want to mark that first. Okay, give me a second. See, it's a little bit slow here. Okay. Okay, I want to mark that. Oh, there you go. Give me a second. All the way down there. Okay, so I mark that based on Fibonacci. That's my potential probable take profit area. Okay, but then now I want to do the AB equals CD approach and make that like that. Okay, AB equals CD, but let me reduce the size so you can see. So here you can see that it matches with that Fibonacci projection as well. I mean, quite close to it. Okay, so you've got a bit of a zone going on there. Okay, so this area is my take profit area. Okay, so this is for GBP USD on a 1 hour chart. Okay, but I'm not saying, okay, now you can go and sell like straight away. We haven't found when yet. When do you actually start selling? When would be ideal? That is the question that you need to have, because if not, you might get attacked back by the market and then you sell now and then a correction happens and then you start to lose it. Okay, so here what you need to do is combine that very top there all the way down here and find the center point, which I call it the centroid. So you got your centroid here. This centroid, because this ABCD is pointing down, the arrow is down, so your direction is down, your direction is sell, your take profit area is here, your entry area potentially based on the principles of centroid geometric pattern is based on the centroid area here under 1.2173. So it's better to adjust that based on principle of psychological numbers to make it 1.2170. Okay, so 1.2170 because it's under the 80 psych number. So your ideal entry for your short would be 1.2170. Okay, so there you go. Now you've got that here. Now when you guys once my website, sorry, fxgeometry.com is ready, then you will have the opportunity to chat with me personally as well, to check, because inside the members area we'll have a group chat area. The group chat area will allow you to ask direct questions to me, to Mr. Kunun, to Mr. Arif, to the rest of the other mentors as well that I will be training, and they will be helping you to answer questions. You can ask. It's like hotline. It's like a group chat, geometric group chat. So you can ask anything geometrically related, trading related on your trades and everything else on the chat. So that will allow you to get the full support of the mentors from fxgeometry.com. Okay, and you can send your charts. I would guess be the best way to mentor you is to send your screenshots like this, and you draw your pattern, your version. Doesn't matter whether your version looks like something else totally or not. It doesn't matter. What matters is that we teach you, mentor you to actually adjust until you perfect your geometric trading skills. Okay, so 12170. Then you've got your take profit area 1.97. That was, let me just double check that again. Okay, 1.1919. Okay, so it's best for you to look into principles of psychological number and adjust that to 1.1930. So 1.1930 would be your ideal take profit area. Okay, we will cover that in the tutorials as well, in your FX Geometry tutorial videos inside the members area. I will teach you how to apply your psychological numbers. Okay. So don't worry, you've got a short video under 5 minutes to tell you how, and then you've got examples of psychological numbers, examples of how you can actually do your entry, your exit, apply your stop loss and take profit with psychological numbers. So that will be a separate video, a very short video, give you exact examples on the live chart. You can see my screen, how I do it. I'll write onto the chart as well so you can see it. Okay, so 1.1930 will be ideal. Okay, there you go. Okay, right? So if you pull that using the crosshair from the roughly the entry area here right down to the top line there, okay, you've got is that 25? Yeah, 215. No, cannot be. There you go, 25, because yeah, or pips or so. 19, yes it is actually. Let's see, 930 and 170. That's the number of pips that we're looking at. Okay, so this is an area that you can look into selling, but we are not selling from this very top here. It's the center area, because we want to cut our risk. Okay, we want to look into our risk, we want to evaluate the risk, and this centroid area is really powerful, because you can see that we draw this line and automatically prices found resistant here, and you can always go onto your 4-hour chart, okay, and you can see automatically you can see a lot of concentration of price automatically here. You can pull this one here, and it usually happens like that automatically when you draw your centroid area based on the pattern. That centroid area or horizontal line that you have drawn acts as a support resistant line as well, and it usually marks or shows you a very significant level where prices have concentrated or prices have bounced a lot on, and things like that. Okay, so hence the reason I trade that way, using patterns, and I use the centroid as my powerful significant support resistant area, and then I readjust my entry point that I see based on the centroid, based on the psychological numbers. Okay, so this is one area. All right, guys, so there you go. You've got just one or two pairs here to share with you there earlier on, and let's go on to gold as well. A lot of traders have been asking me about gold. I can just say one thing about gold. Gold, yes, I mean, future-wise, lots of potential to the upside, but again, the question is when, okay? When? So quite a number of traders that burn their fingers because they hear just the gossip about prices of gold going to go up, and they straight away go in and buy. So it doesn't work like that most of the time. The best thing to do is always to combine what do you call that, fundamental and technical, get a mentor like us to guide you through in a community of traders, and then you double check and you keep checking with people, and then know one or two strategies that you can apply practically, and then share ideas with us, and then make your decisions to trade. Okay, so let's see, we have got some questions. Okay, very good question, Elias. Based on the stop loss and take profit, okay, this is a very good question. Now, usually for risk and reward, I use the 1-to-1 ratio, meaning if my potential pips that I have counted, once I have done the patterns and all that, you draw your take profit area, you draw your centroid for your ideal entry and all that, you look at your potential profit. If I use the risk reward ratio of 1-to-1, then my number of pips in profit would equal number of pips for my risk, for my stop loss. So if it is about from entry to take profit, it is about 80 pips, then from entry to the level I'm willing to stop out or get stopped out would be 80 pips as well. So it's equal, okay, 1-to-1 ratio. That is one way of doing it. The other way of doing the stop loss is to look into the Fibonacci 67%, meaning if I draw an ABCD pattern, okay, then my ABCD pattern is going up, let's say. Let's go on back into USD/JPY, or let's say GBP here, okay. Let's say if I look into this, right? Let's say we are looking into the yellow ABCD like this here. Okay, the yellow one, yeah. Okay, the A, the B, the C, the D. Okay, so the direction is down because it's pointing downwards. The pattern itself is down, so it's for a sell. So you enter at the centroid area. Okay, so I draw the line here, from here all the way down there, right? Okay, like this. So my centroid area is here. Okay, that's my center point. So I sell under the center point. Okay, I sell under the center point. So when I sell under the center point, from the center point right down to here, how many pips you count that, then you make from there all the way up there, that's your stop loss. But the other way to do your stop loss is to pull your A to B, okay, using your Fibonacci, okay, you pull your A to B from here, you pull your A to B, oops, sorry about that, all the way A to B. That's good. That's your A to B there, okay? You pull your A to B and you look for 67. So 67% is here, roughly. Okay, you insert that ratio. So that 67% becomes your stop loss area. Okay, your stop loss area is this here, 1.25 something. You enter here, your stop loss is up there, but your take profit is down here. So it's more or less a 1 to 2 risk reward ratio if you use the Fibonacci Fibonacci ratio as your stop loss area, but you choose 67% of A to B. It's just that I find that that is the best ratio to use to find a counter direction. Whenever it goes opposite your direction, it goes by 67% of your opposite your direction or opposite your direction from the entry point, then you can count that as a failed sort of pattern. Okay, 67%. All right, so that's basically it. So you don't actually wait until it goes 80%, you know, almost 100% or even 100% opposite your direction. You just limit that to 67% of A to B based on Fibonacci ratio. Okay, hope that is clear. You could choose either one. You want to use the Fibonacci ratio for your stop loss, or you want to use a one-to-one risk-reward ratio. It's entirely up to you. You could actually experiment on both different trades, use different type ways, and see which one fits you best, and you can choose that one. Or you can choose both and diversify. Not a problem. Okay. Okay. FIBO should be drawn from H4 or H1. It depends on your strategy, really. I mean, there is no right and wrong time frame to draw your Fibonacci from. But there is a way, if you're looking at 1 hour, then your support resistance drawing could be on the one time frame up, which is the 4-hour chart, and then to look at the trend is 2 time frame up, which is the daily chart. But in terms of Fibonacci ratio, because it's mathematically driven by ratios and percentages, then there is no necessity to actually have the rules on which time frame to draw your Fibonacci from. It's not really relevant, especially with my my style of strategy trading with patterns. I don't have that rule, but maybe other strategy may have that rule. I don't actually know, but for myself, I don't have it that way. So if I have a pattern that I spotted on the 5-minute chart, I will then draw my Fibonacci on the 5-minute chart. Depends on the pattern that I've drawn, because the Fibonacci for me is to measure how high the probability of the pattern is, and it's not for entry or exit either. So I'm not using the Fibonacci for that. I'm using Fibonacci to measure how high the probability, how good the pattern is, and that's why I pay more attention to the 61.8 ratio and the 78.6 ratio for my C point. Okay. All right. Hope that is clear, Mr. Elias. Perhaps you want to share with us why would you think that it's best to draw the Fibonacci on the 4-hour or the 1 hour? Is that a question or a statement? I'm sorry, I didn't ask you that earlier. Maybe you have a different view on that. Maybe you have different experience on that, because you draw, maybe you find it drawing it on a 1 hour and a 4-hour would be better. Okay, so yeah, that is basically it. GBP USD on that. So I'll give you an example on how you can do that based on your what do you call that, risk. The risk part of it again will be covered in the video, so there will be very detailed videos for you on how you can properly trade with this strategy. because we have the price trade plan, PRICE. So under the P area, we have so many strategies, under the R, under the I. So all these strategies can be combined, but I will be producing quite a number of videos for different sections, and then I will have different videos just for drawing the geometric pattern itself section. So you will have loads and loads of videos, okay, to watch, so that I can guide you on which video for your question, and then you can then come back to me, and then I can feedback you again, so we can then learn from each other too. Okay, all right. Okay, guys, so that's basically it, giving you some ideas, you know, one or two here and there. We have got quite a number of pattern that is going on at the moment. We are still looking at gold on the daily chart. I'm expecting a bit of a fall again for gold once it reaches the 1215.50 area. It is going to the upside at the moment, but I find it a bit of a limit for it to come up, mainly because of two reasons. One is, of course, the pattern that I'll be talking to you about, but secondly, it's quite important as well because it's fundamentally driven. It's because of Trump too, because Trump has actually hinted the market that you know, a couple of $1 trillion will be pumped into the market, so that may or most probably create more inflation for the dollar. So the creation of inflation, the bubbling up of the dollar value would then it's not really the dollar value, it's actually the supply, okay, of the money in there, the not really the demand but supply of it, and that would create inflation, and inflation would then look into the depreciation of the gold prices. Okay, so here I've got a Z-like pattern labeled in yellow. We've got the letters A, B, C, D. As you can see, this is a bearish type pattern, meaning once we've got prices reaching the D area here marked by the yellow zone, then you are looking at a possible fall. So only if prices go beyond the 1215.52, or better still 1.1215 or 1215.60, okay, 60 cents, 60, then you can look into more appreciation upwards, aiming at that level 1272 area. But let's just wait and see what happens, because it is now in the zone appreciating upwards. So if it does go up a little bit more and start correcting from 1215.50 area, then you may see it most likely to fall downwards. And that downward fall, you can aim your sell take profit at least 50% of the C to D leg. Okay, so that is basically my opinion and idea on the goal for the daily chart. So again, we are looking into a little bit of upward move. So for those who want to look into buying opportunities, go back, go downwards to your lower time frames, and then you can look into patterns there as well and take advantage of it. For those who want to wait till it comes down, because this is a bearish type pattern, riding the trend to the downside, then you want prices to first make that correction and heading downwards and go under 1191.50 area to look into 119.40 as an ideal selling area, and look into how much USD's impact is on gold in terms of its strength. Okay, so this is basically it. Okay, so that is for the gold side of it. We had quite a number of trade signals that were released yesterday, has hit its take profit today. So it took about a day or so, even though on the 4-hour chart, because the trend was strong. So we had GBP USD. If you guys remember, I shared with you on the 5-minute chart as well, that hit take profit to the downside. AUD JPY for the 2-buy type trades that were taken from the first ABCD pattern, because here, as you can see, we came up with 3 ABCD pattern right there. All 3 is looking like it's positive. So if you've started trading the first ABCD pattern there with the buying area of 85.12, you should be already you know, appreciating quite a lot in your price. And for those who have actually bought let's say based on the red color ABCD pattern, then you should be also having an appreciation of your profit, because it's above 85.60 already. And for those who have just entered and participated in the ABCD upside for AUD/JPY would also benefit as your third trade if those who have taken from the first trade, because it's above the 85.60 here as well. So yes, overall AUD/JPY has been very good. We've been buying. I've been buying too above 85. Yeah, 85.10 or so, or 85.30 or so. I've started buying, so now it's appreciating quite well. So I've opened 3 trades myself. So trading based on the yellow ABCD, the red ABCD, and the green. So all the 3 traffic light colors have been green for me. Okay, so that's good, and hope it's been green for most traders too on the AUD/JPY. So on the Euro JPY, we have given a signal on the sell, I think based on low time frame, 1 hour or the 4 hour or even lower, and it has also hit the take profit area there. Okay, because we were selling from this area here at 122.64, so we went lower at 122.40, and then we took profit around this area at 121.60, so it has actually reached there as well. It was quite a decent, nice pip collection there. Okay, and for JP, let me just, for GBP JPY, GBP JPY also signal a very good momentum this morning onwards. I have shared this yesterday with you, and we have seen and hinted to you that the GBP JPY on the 4-hour chart has formed an M-like pattern. So we traded A, B, C, D on the downside, but we were careful as well because we expected the reversal to be in this zone, and true enough, it has started to sort of reverse. Whether it is just a correction or not, it's too soon to tell, but it has sort of reversed at that area there. That little black box there is a high probability reversal zone, so anywhere between that black box at the top to the black box under there, so it has reversed. So that is a high probability area that it would reverse. That means it come down, reverse to go up in that, within that black box area here. Okay, so it is an M-like pattern. M is a bullish type pattern. I don't look into patterns like the crab and the butterfly and all that. I consolidated everything and look for the ratio. So hence the reason I could be trading when I see the pattern. So in this case, the pattern seemed to be clearer on the 4-hour chart, but not only based on the pattern, combine the fundamentals, but I use a couple of other indicators like the volume indicator and the ADX as well, also to measure how strong the momentum is in terms of liquidity, momentum, and everything else for the GBP JPY. Now, the other thing is very important that I'll produce a video on it as well, is each pair has its own personality, meaning that the time of the day that it would actually do the biggest move for you, and the time of the week, the day of the week, like whether it's a Monday, Wednesday or so. The GBP JPY Wednesday and Thursday seem to be their day for it, so it has actually, you know, provided some good pips on that movement as well. So we're looking at, I mean, for those who have taken profit on the C to D to the downside, they are now looking at the upward move. So for it to reverse, and once it reverse, let's say 140.24, 23 or something like that, we're waiting for it to go at 140.60 at least to give you more momentum to the upside, and then you can actually then aim at least to 61.8 or 78.6 of C to D move. That means your take profit would be C to D from 78.6 to 61.8% of the C to D length to find your take profit area. Okay, so that's quite a nice one, I think. Let's see how it progresses tomorrow. Perhaps this will provide us with a pip tomorrow for the GBP JPY to the upside. Okay, because it's time. It looks like it's time to reverse. Okay, so then we've got CAT JPY. It's probably best for you to match with what are the movements of the market, top movers of the market as well. Here it was quite a nice one here. Provided this signal yesterday for you guys, USD CHF on the 30 minutes chart. It was a very nice W-like pattern here. We were trading from C to D, so we taken profit around that area there. Now we're trading D to E, and that as well has actually hit the take profit area. So there were two legs, two trades. One is from C C to D to the buy and then D to E to the sell. That was very successful, very nice. It progresses again to the downside quite well because we've got loads of appreciation on the CHF, the Swiss franc at the moment. So that sort of complied with that very nice W-like pattern here. So it also reversed very nicely at that zone there, because I think I've mentioned it on the Telegram itself that the time that it was moving upwards, to look out for this red area. It might actually then reverse just before the red area. So it did, and once it reversed just before the red area, it reversed actually just under the 50 site number. Okay, so a site number there is really very important. So here you go. It was a very, very good trade in the USD CHF. Congratulations for the guys who have actually collected some pip on that. Okay. Okay, what else? This one here, just drew it for fun really, but this here is for the USD CHF. I'm just looking at this blue line here, 1.0490, based on principles of mathematics, using some spheres and tools to draw squares and triangles, based on the Pythagoras theory as well. We found that we have got appreciation now beginning for the euro versus the dollar based on the daily chart, because it's above we found that it's got a median sort of line at the 1.0490 area. So whenever prices are above that blue line, 1.0490, it gives you a bullish sort of momentum or sentiment for the euro versus the dollar. Okay, if it's under that blue line, then it is to the downside. Okay, I think I've got some questions there. All right. Any good time position use? This is from Mr. Elias. His question is, any good enter time position use GMT or Malaysian time, especially on the 15 minutes or etc. Okay. All right. In terms of sessions, best timing. Okay. The time should actually, the time for entry or the session that you would choose does depend on your time actually, meaning your time, when would be the best time for you to trade the Forex market? Is it after work when you relax at home and watch TV at night, or is it in the afternoon, or is it in the morning your time? So when you are either morning, afternoon or night your time, you need to ask which pair or which country is active, which country in their time is 8 to 6 working time. So that means, like, let's say for now here in Europe, I'm in Cyprus in Limassol, now it's 4:45, okay? Most people, banks, everywhere else, slowly they're packing up their things. They're going to leave at about 5 o'clock or 6 o'clock. This is the general work time ends, okay? So most of the country all around the world, between 8 to 6 o'clock will be the ideal time that most people are at work, banks are operational and all that kind of thing. So if you are in Malaysia and now it is let's say 4:06, it's 10:45, right? It's 11:15 p.m. or at night in Malaysia. You need to ask yourself, if you want to trade Australian dollar, Australia, is it sleeping time or working time? If it is sleeping time, it's not really an ideal country to choose the currency from. So no point choosing AUD or JPY or Japan as well, very late now, New Zealand very late now. But what about US? US is still good, it's afternoon their time. So US dollar probably better, Euro USD is better. So this is basically in terms of pairs, you choose it like that. In terms of timing, again, you need to look at which session is active. Okay, so you don't choose GMT, or GMT is good for now because it is morning, it is afternoon, towards evening, let's say. It's a good time to choose that session. So if you choose that session, London time or Euro time, then you've got London type, anything connected to the GBP, connected to the USD, connected to the Euro, connected to the CHF. These are pairs that you can trade. These are sessions you can trade. Okay, so it depends first on your time, and then you match your time with the country that are active, and that's basically how you should be picking your pairs accordingly to that. Okay, I hope that's clear, Mr. Elias. All right, brilliant. Thank you very much for that. Okay, so I think that's all I have for you guys now. I mean, I've shared some, maybe not as much pairs, but sometimes it's good to concentrate on some pairs with bigger pip movement and higher probability move, okay, and follow that pip for the day, for the week. It's good, you know, choose 2, 3 very good pairs to trade. That's why we want to follow the big boys, the investors, the movers, the top movers of the market, okay. That's why we want to do that. For those who trade, I'm not sure on the USD ZAR, which is South African Rand. It has been very good for me personally for the last couple of weeks and days. A very nice pattern, and the patterns are very high probability pattern. It reversed very nicely in the reversal zone. Some of them on the dot, you know, like here's a D reversed very nicely. That one reversed very nicely as well. And then you've got it hitting the take profit zone. So it's been quite nice on the USD ZAR, but now we've got the ZAR appreciating so far. So it's appreciating against the dollar because the dollar is very weak. It's getting weaker. Okay, so there are differences between strong and strengthening, weak and weakening. Okay, so this is very important for you to know. Hence the reason I like to look at pairs based on the longer term, so that you can have an idea whether it's strengthening or weakening. Because if it's a long term, then you know from now until the longer term, it'll get stronger and stronger and stronger until to the point of the daily chart. Okay, so that's why we look into the daily chart, weekly as well, to identify the trend, to look into how strong the trend could be for you. This has been a very nice trade for myself and a couple of other traders as well. Some of the traders have traded very large lots on this one and benefited very handsomely. So we've got Euro GBP on the 4-hour chart. We were trading from the C area to the D, so we cross from A to B, find the center area, we place our buy by adjusting it to the psychological numbers, and then we take profit at the zone area here. Usually it's under that line there. Benefited very well on that one. It also reversed very nicely on the Euro GBP. Okay, what else? Okay, I guess that's it, and this comes back to where we've showed you earlier on the sell opportunity on the GBP USD on the 4-hour chart. Okay, guys, just back to you guys again. If you guys have got any questions, feel free ask, and if not, then we shall wrap this evening session. Okay, any questions at all, guys? No questions? Okay, so should I end this session here today? If you guys have got any questions at all, feel free. You know, you can email me at kenny@fxgeometry.com. Okay, that's one. If not, you can always add me on Skype as well. KSimon78. KSIMON 78. Okay, the number. And KSimon78, that's my Skype. Also, do contact Mr. Kunan and Mr. Arif if you guys are interested to join as a member in FX Geometry and then get the access to Telegram, okay? Because we have Telegram group as well, and we can add you in Telegram group, and my number as well. So that's basically it. But you will be guided quite a lot, mentored via fxgeometry.com once you're a member via the group chat itself. So we can always talk, share a lot of information in there, and then combine the information with what I share with you or have shared with you on the webinars. Okay, so we've got questions. All right, let's see. Okay, Niti, I appreciate that very much. Yes, I'm as excited as you guys to actually welcome you guys into FX Geometry, to have you guys in FX Geometry. We just need, it's much needed actually, because we've got, you know, hundreds to thousands of people, members, my students from a long time ago, from all parts of the world. They've been asking as well. So hence the reason I need a home for them. So I need a home for everyone, including myself, to meet up, for you guys, meet up to ask, to be mentored and everything else, or watch the tutorial. So I'm not looking at longer than a week. So I've been pushing my developers as well, just because of the holidays, this and that, a couple of other things, because you see my developers are Russian. So Russians have got their Christmas on the 6th of January. So our Christmas finished, their Christmas just begun that just began at the time on the 6th of January. So we've got this lapse of elongated weekend holidays, so that's where the problem was. But then now everybody's back and running, so they are sorting out things for me as we speak. So hopefully that gets into action very soon. Okay, so that's it. Mr. Kunan has put in a nice reminder there. Yes, I mean, for any queries with regards to that, I mean, I'm always here. I'm based in Limassol, okay, in Cyprus, and I work very closely with Mr. Kunan. So Mr. Kunan and Mr. Arif, they will be, taking care of things on the ground for me and helping me, to a great extent in Malaysia, especially. And any queries at all, we can always go through Mr. Kunan, and then they will always come back to me, and we can always sort things out together. Okay, it's just the time difference as well, 6 hours. So Malaysia is 6 hours ahead. I know it's quite late for you guys now. It's just before 5 now here in Limassol. Okay, so that's it. And yes, for any queries, go through Mr. Kunan. He is a gentleman to help you guys out with Mr. Arif as well. And anything else with regards to geometric trades, analysis, and everything else, I mean, I'd be very happy to guide you guys through very, very soon. So we are all hoping hard for the FX geometry to succeed, but most importantly to complete the website very soon, so that we all can actually go in and can enter the members area and lepak in the members area and lepak while we trade and earn. Okay, so that's very important. Okay, guys. So that's it from me. I would like to first say a big thank you to you guys, for attending. Okay, thank you very much for your support. And anything else, email like I've mentioned, and speak to Mr. Kunan to get in touch with me if you want directly via Skype or via Telegram or WhatsApp or anything like that. Okay, all right, guys. I think that's it, Mr. Kunan, from me and you guys as well. I want to wish you guys a very good evening. Have a good night, and have a brilliant day tomorrow ahead of you. Tomorrow is Friday, TGIF. Okay, so okay, take care. Greetings here from the rest of us here, and thank you very much. Bye-bye.